All right, what's going on, everybody? Xavier here, long time no see. Hope you guys are having a good 2026. Wanted to go over my my last year's returns and how I did it. So 1 year ago, almost, not quite. I used to have a Fidelity account, but then I opened up a Robinhood account, and then I, which was at about February of last year, really March, and then I started trading options. I would do credit spreads. I would do selling puts and covered calls and buying leaps, etc. So last year, my this says past year because my year to date is already almost 13%. 1 year ago, it was about 62% return on my entire portfolio, which is pretty good. It's about four times what the year over year average is over the span of what somebody would do investing for the long term in their own portfolio, right? So all I did was sell cash secured puts, credit spreads, and I bought leaps. And that is the same strategy that I'm going to be doing this year. As you can tell, it's already off to a good start. Besides this guy, I'm getting pretty toasted on because it's a covered call on iron, and it's well above the strike, as you can see. So I'm probably going to get all my shares called away unless it decides to reverse and go back down. Which it won't be all my shares; it'll be about half my shares, so that's fine. But we still got some options going. We got some selling puts on Oklo, leaps on UNH, leaps on MP, leaps on Microsoft, which this one's quite a bit down. 520. I bought this in the money after earnings almost 3 months ago because it's coming up on earnings. So pretty big loss at the moment, but this is why you buy leaps because of how far out we have. So that's all I did. I sold cash secure puts. I sold credit spreads, which I don't really do anymore, and then I bought leaps. That's all you need to do to beat the market. And this year I'm just trying to get an average of 3%. So that's what I've done. Now I'm only doing this on companies that I understand and that I regularly look into to make sure it's my theory upon why I'm buying it is still strong. Now people might say, well, why use uncovered calls on iron if you think so highly of it? Well, the bottom line is I'm selling covered calls because I'm kind of running the wheel strategy. I'm not really a long-term investor. I am, but I don't buy and hold shares only because I live off my portfolio, right? So this goes up and down in value. I mean, at my all-time highs, which was in August, it was at 108, and now I'm getting close to being back at that. And look how low it goes, or how low it went. So it ebbs and flows. I don't really care too much about what this number is. I mean, I would like it to stay above six figures, which I think it will fully now. I mean, last year I did a lot of things. I did a cross-country trip, went around the country. I paid off some debt, so that's why this account goes up and down. I mean, tens of thousands of dollars on things. So this year, my goal is to maintain the six figures. I would like this to get to 200. I know that's a crazy feat, but at the minimum, 3% return every month until the end of the year. Because I'm probably pursuing law school, which I've been studying for the LSAT the past 2 months. That's kind of why I've been not so focused on this. I've been writing my articles still. I've just been kind of contemplating what the next steps are because this is fun to do. And I just don't think a lot of people have the stomach to do it. And it's not really a full time job. Like, I can create YouTube videos, I can continue to write on X, I can continue to write articles about this. That's more of a hobby, and it just does not take 40 hours a week to do all these things. I mean, it might take me maybe 2 hours a week of studying and just looking at trades that I should do. Because once you understand like what a company's value is worth, and I go on X for in my free time just to see like what is interesting, what isn't interesting, what the social arbitrage is of what stocks are doing. You kind of learn like when you see a company trading at something lower than what it should be trading at. Okay, that's a good time to sell a put or buy a leap, etc. So it just doesn't take that much time. That's why I'm switching to doing something that I'm very interested in, like pursuing law, and I might even end up recording videos about that journey and taking the LSAT and everything, which I'm taking next month. So But in terms of my portfolio, that is how I made a 62% return last year. And this year, I'm already doing um, pretty much what people do in an entire year or even more. So, good start to the year. Cash secured puts, covered calls, credit spreads, buying leaps. I have tons of videos that I already go over explaining how I do that. Not that anybody really watches my YouTube channel. I just kind of do this for me. It's fun. And if other people are interested in learning more about it, I'll probably cover another video how to do each of those. I'll probably do a credit spread tutorial, who kind of should be doing that. And then I'll do like buying leaps. I'll do cash secured puts, and just how I go about doing it instead of just explaining to you or telling you what I do. I'll explain more in detail about how I do it and how anybody can do this. Really, it's just a matter of doing the thing and putting aside a few hours a week to do it. But yeah, that's about it. I appreciate you guys watching. If you have any questions, you can email me. Everything's gonna be down in the description below. And yeah, that's it for me. I'm probably gonna start posting like once or twice a week. And yeah, that's about it.